I'm Charlotte McLeod with investingnews.com, and here today with me is Mark Skousen. He's known as America's economist, and he's editor at Forecasts and Strategies, a professor at Chapman University, producer of Freedom Fest, and the author of 25 books. We have the latest one right here. Thank you so much for being here.
Charlotte, it's a pleasure. Yeah. New Orleans, my favorite town.
Yes, I was going to ask you. I think everybody knows you've been coming to this conference for quite a while, and I know it's early on in this event, but is there anything you can say about the mood at this conference that is different than previous years or similar? Any thoughts so far?
Yeah, that's a good beginning because I've been around at this conference longer than any other speaker here at this conference. I started in 1978. I did not get there for the earliest in 74, but I've been there in the 70s, 80s, and all 5 decades, I guess, if you will. And the height of the market, there was 3,000 people here at this conference in 1980 when Ronald Reagan was elected president. And what was really interesting about that event was that I thought everyone would be excited about Reagan being elected and that this could be a change, a paradigm shift away from gold and silver and more traditional investing in stocks and bonds. That was my perspective. But it turned out that I was very much the minority, and that even Jim Blanchard, the founder of this conference, was very negative. He thought there would be no change. And yet we went through a 20-year bear market in gold and silver, and stocks and bonds, traditional investments, rallied tremendously. And we're still enjoying that kind of a bull market, maybe not in bonds, but in stocks. So there's been a wilderness period of time when attendance slowed. Very few people, they continued the conference the whole time. But there's a renaissance going on now. I mean, this is the biggest turnout I've seen in 10 years. And mainly because gold and silver have really hit a major bull market. And so there's plenty of exhibitors, the mining companies. This is the good old days in so many ways. And but it's this is a feast or famine kind of business. The thrill of victory and the agony of defeat is very common. I like Rick Rule's statement, which I have. Another book I have is called The Maxims of Wall Street. And in it, I have a quote from Rick Rule, who's one of the mining experts here. I'm sure you'll interview him. So Rick says, we've lived through the hard times. Now it's time to enjoy the good times. And that's what's happening right now. We'll see how long it lasts.
We'll see. But for now, it seems busy. People seem optimistic right now. And as you mentioned, it's probably largely because of what we see going on with gold and silver prices. So we've seen them get to all-time highs this year. I know we're in a little bit of a pullback right now, but they're historically high. And I wondered if you could talk a little bit about what you see as the main drivers of gold right now.
It's been a really tough question because it really has moved much faster, much quicker than I expected. And so I do think that the pullback was really necessary. I was glad to see it. That's healthy to have that sort of thing. But what has pushed gold higher? It's really hard to say because I guess even though the Trump administration is engaging in a major shift in the approach, we've been pro-globalization, expansion. He was elected on the basis of bringing back tradition, cultural tradition, and maybe some sanity back to government. So you would expect stocks to do well, which they have, but gold and silver have also done well. So I think it's because of a couple of reasons. One is inflation. We've entered an era of what I call permanent inflation, and we have since World War II. I have a wonderful chart that I'm showing here at this conference where prior to World War II, inflation was temporary due to wars. But after World War II, inflation became permanent. Higher and higher prices every year. The inflation rate may ebb and it may accelerate, but it's always positive year after year. And that's happening. So I think inflation is stubborn, and that's been bullish for gold and silver. But the other factor is apparently central banks are concerned about the U.S., the dollar being the world's currency, and there's a lot of borrowing, and the national debt's getting out of hand. Interest payments are going up. I think there's a little bit of fear that the dollar is not going to be able to maintain its status as a world currency. And so all these central banks are now buying gold. I don't think it's so much individuals and institutions. As Robert Prechter said this morning, gold is underowned by Wall Street and the establishment firms compared to stocks and bonds and even and real estate and even Bitcoin. So I really think that there is that strong central banks are a very powerful force when they start buying. They used to sell gold, now they're buying gold. So I think in China especially, they're angry at Trump for his, and so they're backing off their purchases of treasury bills and they're buying gold. So I think those are the factors that are involved, and I don't think it's necessarily over. So I see this as a correction. I don't know if it's a topping out and how long that will last. We're still at 4,000. So yeah, and silver at 48.
Yeah, I believe when we were corresponding ahead of time, you're mentioning you had a price target of more like 5,000 for
Yeah.
gold. So how are you situating that right now? It feels closer than ever.
Yeah, shocking.
Yeah, yeah.
I mean, it's a little bit unexpected even on my part. I made this prediction as kind of an outrageous prediction, which you normally do in promotional copy to get people to pay attention. So I just threw out this $5,000 figure, not thinking that on a technical basis it would hit it. But I think we got up to 4,500 or something like that at the top. And then it's backed off. So we'll see if it hits 5,000 by the end of this year. It's still conceivable that it could happen. But if you follow Robert Prechter's Elliott Wave theory, I don't know if you listened to his talk today, but he was rather, he thinks that this is that the cycle has been complete and that this round we've seen the highs in gold and silver, and it won't be another year or more, at least the way I read it, that he would see that. And I think he's more accurate on his predictions of gold than he is on the stock market. I think he's generally missed the stock market perspective, but he does seem to, he may have a point about gold. We may need to have a resting point here for a while.
Yeah, I think it seems like everyone is agreeing that we needed this pullback, and the question now is everyone's divided on how long it will last.
Yeah.
And you started to mention silver as well, so I'll bring up the silver price and ask you maybe where you see that going, because we do tend to hear it follows gold and then outperforms. So any thoughts?
So I always carry with me a American Eagle silver dollar. Canadians make this also.
Yes.
All right, Canadian. So I carry this with me at all times. And when I teach at Chapman University, I offer these. Every student gets a silver dollar who takes my class at the end of the class, and it has the date, 2025, when they took my course. And so it's always a reminder to them. And I say, keep this on you and it'll give you good luck. It's costing me a pretty penny now. These things are like
I was gonna
60
say,
bucks, because of the premium. And I am concerned. I may want to give him a copy of my book instead of that, because the price. One of the things that's interesting about silver is that in 1960, this was before your time, but I remember in 1960, you could go into a bookstore, and how much would you pay for a hardback book, a best-selling book, in a bookstore in 1960? How many dollars do you think?
I'm afraid to get $2.
$3.
$3.
$3. That was 3 silver dollars. Do you know how much you can buy a hardback book today in terms of a silver?
Oh, probably about one.
One or less.
Yeah.
Less than 1 silver dollar. So silver doesn't pay any interest, and yet it's a superior inflation hedge. And gold is the same thing. I think, although silver, I think, is more volatile, but has been a better inflation hedge. So I'm actually quite bullish on silver. I'm disappointed that it's so expensive now. I wished it was cheaper for my students and just to purchase it and stuff like that. It's a tragedy in today's world from a long-term perspective that these don't circulate anymore, that we just have this token paper money and little tinty type of coins. And these are all beautiful coins. It's got Lady Liberty on here, and God We Trust, the rising sun, which was Ben Franklin's favorite symbol. He's right on the and the eagle on the back. And where are these? 50 million of these were minted this year, at least 50 million. You know where they are? Safety deposit boxes.
Yeah, hidden away.
In dark. These beautiful coins. I mean, is that not ironic that we live in a society where gold and silver, because of Gresham's law, bad money drives out good. So you have the paper money. I got a $1 paper money. Okay, they're both legal tender at $1. Could do this with Canadian also. So they're both legal tender. Okay, so which one do you put in your pocket and save, or in a safety deposit box, and which do you spend? So it's called Gresham's law. Bad money drives out good money. And that's exactly what is happening. And it's too bad that that's happening.
Yeah, I think the visual reminder there really helps. And I want to talk about another point you mentioned in the lead up to this interview, which is that gold has outperformed the stock market in the 21st century. You mentioned that's something that's been on your mind. So what is that telling us about the world today?
Yeah, so there in the 21st century, we've had, in the latter 20, gold and silver were deregulated by 1970, more or less. Okay, and they increased in price and stuff. But you had these long periods of time of a bear market, 20-year bear market. Really, gold was selling for $200 to $300 an ounce in the year 2000. And so if you look at the charts, if you look at total return of the stock market in the 21st century, gold itself, even though it doesn't pay any interest or dividends, has outperformed the stock market. And I think it's for three events that occurred. One was 9/11, and we had the beginning of the terrorist attacks, and you had the war in Iraq, very, very expensive. Then you had the financial crisis of 2008. That caused a massive inflation and a bailout of the banks and Wall Street. And then you had the pandemic of 2020, and money supply went up 40% during that time period. So you had these three events that caused a reawakening of gold and silver, even though, again, a lot more volatility than the stock market itself. But overall return was definitely much better. Yeah.
Well, and I think people wonder right now, and especially maybe at this event, looking at the stock market, are we due for a correction? Maybe something worse than that? How do you see it?
I do think that it's gone up too far, too fast. Reminds me of the dot-com boom, where AI is definitely revolutionary. But like dot-com period, there's the good seed and the bad seed. And how do you know the difference? It's really hard to know. So in the dot-com boom, there was a legitimate technological advance with the internet. And there were a lot of good companies that were developed at that time, but we really had a lot of bad investments, and you had a cleaning out process. A burning, if you will, of the wheat and the tares. It's Jesus's parable at work here, and I think that's what's happening with AI. So I think there's going to be a falling out at some point, and the good guys will survive and prosper. But you never know how long these things will last. And so, in the AI boom, I remember in 1999 looking at the QQQ, the technology, and it was hyperbolic. And we economists looked at that and they say, well, this can't last. But it lasted another 3 months into the year 2000, before it finally came down. And you had a 2 to 3 year bear market in technology at that time. So why couldn't that happen once people see, oh, I'm not being made billionaires overnight anymore. There could be a real falling out and so forth. I'm not as pessimistic as some people are on the stock market. Proctor said it's a massive, insane mania and stuff like that, and you could see a potential crash. We don't see crashes anymore. We see bear markets, but we don't see crashes. Why? Because the government intervenes. They stop the trading on the marketplace. If the market drops 10% or more, they stop trading. And also you have a plunge protection team. You have the SEC, you have the Federal Reserve, you have the Treasury. They get together, their
Yeah.
plunge protection team, and they intervene and keep the market stabilized. So for those reasons, I actually predicted the 1987 stock market crash. The stock market fell 22.5% in one day. And I actually got people out. Nobody followed my advice, but I predicted that we would have a bear market. We ended up losing money, 22.5%. But that was the bottom because the government learned very quickly we can't allow this to happen in the future. They can't stop bear markets, but they can intervene and keep crashes from happening. So I don't use the term crash hardly ever anymore. I don't think we see that sort of thing going on, but we do see bear markets, and we could see a bear market in these AI stocks, and it's really hard to predict when it would happen.
Well, and I would ask if the same goes for the economy as well, because especially again at this event, you hear a lot of concerns about a recession or stagflation, all these different words. And it seems like another case where the government will just perhaps step in and stop anything really terrible from happening. Any thoughts on that?
So I am famous for creating a new statistic called gross output, GO. And gross output is measured by the U.S. federal government, the Bureau of Economic Analysis, the BEA, that puts out GDP statistics. And gross output, GO, measures spending at all stages of production. And it's been growing at an extremely slow rate, like 1% a year. That's it. And this includes the supply chain. The supply chain is not growing very fast. And I think one of the reasons is the Trump tariffs. Those are taxes. I think they've really hurt the supply chain. They've hurt the economy. But that's reversible. I mean, Trump could overnight saying, "Hey, we're going to eliminate the tariffs temporarily to get the economy going again." So that's certainly happened. But the national debt problem is a serious problem, and interest rates are rising, so the payment of interest is increasing faster than the debt itself. I mean, you got to refinance trillions and trillions of treasuries, and with China not willing to buy these treasuries anymore, who are going to buy these? So there could be a dollar crisis of some sort of monetary crisis that could bring about a bear market. And I've said, I've predicted a number of times that these technology stocks could fall half in value and still be overvalued. So we'll see what happens in that regard, but it is something to be concerned about, and I am concerned about. I'm speaking tomorrow on Trump's his trade policies, and Fortress America is what I call it. From everything I can see, it's not just a negotiating skill. Everyone says, well, it's just a negotiation. But, I think it's more than that, because the way he's constantly preaching, it's like America first and protectionism is a permanent change. So there's a paradigm shift in today's philosophy away from globalization, which was very beneficial to everybody. I don't care what Trump says, that we were ripped off by foreigners and stuff like that. Well, you go into Walmart, you go into Target, are you really ripped off as consumers? Now, maybe as producers, workers, they had to change jobs and stuff like that. But that's part of the dynamics of creative disruption that the economy goes through, and that's part of life. I mean, how many people have the same job for their entire lives? I know I haven't. I mean, you probably haven't either. You do a lot of different things. labor, out of land, labor, and capital. This is what I teach at Chapman. Land, labor, and capital. Which one is the most flexible? Now, capital itself is very flexible, but capital goods, once you produce the tools and equipment and buildings, they're not very flexible. You can only use it for one thing. So capital goods, labor, and rent, and land. Land is limited in what you can do with that as well, but labor is the most flexible. You can be retrained, you can get a new job, and we need to recognize that in America and not be afraid of the dynamics of the economy.
Well, and maybe we can tie into your new book as well, because this is about the life of Benjamin Franklin, but it's also about teaching people, okay, what can you learn and apply from his life? So we're in these interesting times. What would you pull out maybe some lessons for people?
Well, Charlotte, thank you for bringing up my book, which is here. I have a lot of fun with the title. I tell people, who is the greatest American? We have a really interesting discussion about that. But Franklin is a unique individual because I came up with 22 careers that he lived, as an inventor and a scientist and a printer and a publisher and a capitalist and a banker and a legislator and a diplomat. I mean, you start coming up with all these different things that he did in life. So he's a jack of all trades and a master of most. And so my book is not a typical biography. There's lots of books, biographies of Benjamin Franklin that have been put out. So what I have is 80 short chapters on how you can apply to Franklin's works and life to today. So what did he say about trade? Well, he said no nation was ever ruined by trade, even the most disadvantaged. So that's an important concept. He said everybody benefits ultimately from trade. So open markets. He also believed in a liberal immigration policy. He said, if you have skills, come to America. We have an open door policy. We don't have that anymore. It's very difficult to get into America and so forth. And so Franklin said, hey, let's have an open, not open borders where anybody comes across, but if you qualify, if you have skills, come on. I mean, if you look at NVIDIA, you look at Microsoft, you look at Tesla, they're all run by foreigners. A lot of them from Canada. Yeah, but they came to the States because we attract entrepreneurs. And if we close the door to that, then our days are numbered and other countries are going to step forward. I have appreciated Canada's open policy toward Hong Kong, people from China and so forth coming over and becoming citizens. And that's to Canada's advantage, in my opinion. So globalization is really very positive. Inflation. Now, Franklin is very modern. He kind of favored the central banking Alexander Hamilton approach. He actually wrote an essay, a pamphlet in favor of printing of paper money because England restricted gold and silver to the colonies. They couldn't mint their own coins. And so he advocated the printing of money, but not to excess because he knew that would cause inflation. So he's very modern in that respect. And Franklin is, he actually designed the very first bronze coin in America. And underneath it says, mind your business. Yeah, mind your own business was his slogan that he had there. And also taxes. He said, a virtuous and industrious people may be cheaply governed. So cheap government, low-cost government, easy taxes. What are easy taxes? Well, taxes are you pay it and you don't engage in tax shelters and tax havens and stuff like that. If it's easy, it's just 10%. Okay, I can pay 10%. But if it's 40%, if it's 80%, I'm going to engage in all kinds of shenanigans to get around the tax. So he favored a low-taxed, minimal-sized government in that respect. And in diplomacy, he actually, President Trump actually brought in the bust of Ben Franklin into the Oval Office. I have a picture of him with the bust of Franklin. And I think he was channeling Franklin's experience as a diplomat. He was America's greatest diplomat. And what he said was, though, he says, I learned by sad experience never to speak ill of anyone in public. Now, Trump could learn a lot from that statement, but Franklin would negotiate and work with people, and by befriending them, there was one legislator who was his enemy, and he didn't like Franklin at all. So Franklin went up to him one time and he said, I see you have in your library a book that looks very interesting. Would you mind if I borrow that book from you? And he gladly loaned the book to Ben Franklin. Books were very scarce back then, very expensive. They became fast friends as a result of that, of Franklin reaching out and saying, hey, let's be friends. So that's the kind of thing I talk about, 80 chapters. It was based on a column that I wrote for 6 or 7 years for the Franklin Prosperity Report that was published by Newsmax. They accepted all of my columns except one. One of them was censored. So what do you think the topic was? Do you know anything about Franklin?
No.
Yes.
What was the topic?
It was the rather salacious chapter about Franklin and his sex life.
Oh my goodness.
Yes.
Wow.
Franklin was famous for being a ladies' man. Now, he was often viewed as a lecher and a womanizer. Other terms were used. He was also a heretic when it came to religion. He was not an active churchgoer and stuff. So John Adams and his wife Abigail, they always complained about Franklin being a non-believer and a heretic and a womanizer. They were both over in France together, and Franklin got along tremendously with the French, and the French women loved him. Well, the Adams, they were very puritanical, and they didn't understand the physical contact and stuff. Even with married women, Franklin was a widower at the time. But he was friends with everybody, and the salons over there were run by women. The intellectual get-togethers were hosted by women, and often beautiful women. And Franklin, so he was very much attracted to this, but Adams and the others. But Franklin was a very good diplomat. He raised all the money. He raised all the armaments. He sent generals over so that without that, the Americans would have never won the revolution. And one of the things he wanted to do when he signed the treaty between England and him, it was in France that they did this treaty. One of the things he stipulated says, we would like to have Canada as part of the United States. You know what Trump is always saying about let's make it the 51st state. Well, that one didn't go through, but it was Franklin's wish because he said culturally we're very similar. So anyway, that's a little bit about my book, and it's already in its second printing and available on Amazon, and where all good books are sold.
Great anecdotes. Thank you so much for sharing. And I'll let you get back out onto the show floor. I know you've got lots to do, but before I do, I'm going to try to ask everybody this question. Looking forward to 2026, what would be your pick for the best performing asset of next year?
So I have a chart that shows the different asset classes and which have done the best over the years. And of course, Bitcoin dominates over the last 15 years. I think 9 out of the last 15 years, Bitcoin was the best performing asset. And it could happen again. I mean, if Bitcoin continues to be this new technology and stuff, it's this year, it's only up 25%, which is beating the market and stuff, but gold is up 50%. So it's really hard to predict 2026 because it is a midterm election year. And the stock market's already done really well. Gold has already done really well. So maybe Bitcoin will be the best performer. It's really hard to predict these things, but maybe in the crypto field that may come back alive. Maybe uranium. You know, there's still I think there's a lot of more. I mean, uranium stocks have doubled and stuff like that, but there could be more room because it's got the support of most of the West now as an alternative energy source, a safer source. It's considered safer now. So maybe uranium would be even a better pick. I'll stick with that one.
Okay, that sounds pretty good to me.
Yeah.
Well, thank you so much for coming on to talk. This was great.
Yeah. Thank you.
Of
Real
course.
pleasure,
And
sure.
yes, yeah, great to have you. And once again, I'm Charlotte McLeod with investingnews.com. And this is Mark Skousen.